Welcome to our Loans That Enhance Your Impact webinar. I'm Joe Kelly and I lead the marketing team at Charity Bank. Today, we're delighted to be joined by our experts, Carolyn Sims, Director of Impact Lending at Charity Bank, and Nathan Whitaker, Director of Business Development and Borrower Experience at Charity Bank. We're also delighted to be joined by borrowers of Charity Bank, Mandy Young, CEO of Adrenaline Alley, and Sebastian Roca, CEO of Micro Rainbow. So today we're going to be exploring how ethical finance can support your social purpose organisation. Please feel free to add any questions throughout the session in the dedicated chat box. You'll see it at the bottom of your screen. And throughout we'll answer questions and there will be a dedicated Q&A at the very end. So if we get started, Carolyn, I'll hand over to you.
Thank you, Joe, and good afternoon, everybody, and welcome. As Joe said, I am the Director of Impact Lending at Charity Bank. I've been here for 20 years now, so I've seen quite a wide variety of organisations that we funded and supported. And aside from my day job, I'm also Chair of the Postcode Lottery Innovation Trust. So I think it's fair to say I live and breathe the sector. So I just want to give you a bit of context about why we're running this webinar, tell you a bit of background about Charity Bank. So basically, Charity Bank exists to support organisations such as yourselves. We want to help organisations enhance and grow their social impact. We aren't so much hung up on the legal format of the organisations we lend to, but what really drives and motivates us is the impact that organisations have, the good that you're doing within your local communities or with disadvantaged communities. So basically, to describe how Charity Bank operates, we are the loans and savings banks for charities and social enterprises. People can place money on deposit with us because they want to see their savings do good. And it can be individuals, trusts, foundations, corporates, SMEs, other charities. But people save with us in the knowledge that all of the money they place on deposit with us is used for good purpose, to grow social impact. And as the slide says, our vision is for a society that fosters vibrant communities and a healthy planet, giving every individual the opportunity to thrive. And these are the sorts of organisations that we wish to support. In our time of being, since our inception in 2002, we've made over 1,400 loans worth more than £594 million. And also, I think it's an important point to note that we are 100% owned by charities and social purpose investors. So you can see on this slide the wide variety of shareholders that we have. Our largest shareholder is Better Society Capital, I suspect known to many of you, and we work very closely with Better Society Capital. For some of the larger loans that we make, they co-fund alongside us, so it is a very close working relationship. And aside from that, there's probably a lot of names that are familiar with you: Esme Fairburn, Tudor Trust, for example, Garfield Weston. And then some other organisations, maybe not so familiar. So a number of the livery companies invest in Charity Bank. And also a more recent investor is the Church of England. And we're working with the Church of England to see how we can widen work that some of the churches are doing, whether it's around energy efficiency work to their buildings, or maybe providing affordable housing on spare or glebe land. So I've already said that we've made over £594 million in loans across more than 1,400 organisations. And this slide just gives you a flavour of where the majority of our lending has been made to. So I think that the largest area of lending for us is in the social housing space. So nearly half of our loan book has been to social housing. But that is social housing in the widest sense. It can include the very large registered providers, but it is also smaller community-based organisations such as community land trusts. We do a lot of work with almshouses and Abbeyfield societies, and also charities that provide housing for people that maybe have come out of prison or women's refuges. And then fairly closely behind that in terms of number of loans is in our faith and health and social care. With faith, we are very clear about the types of organisations we will lend to. So we don't lend for faith per se. We want to lend to outward-looking organisations who are fully embedded in their local communities. So maybe they're providing food banks, support to people who are coming out of prison, they're working with the elderly or those who are lonely and vulnerable. And there are an awful lot of faith-based organisations out there that are doing great work in their local communities. We do a lot of work in the health and social care space. We particularly like to fund organisations that are working with people with profound and multiple learning difficulties. So we fund a lot of small and specialised care homes. But we work across all types of organisations. So sport, we've lent to leisure centres, we've lent to small community organisations. One that always sticks in my mind is an organisation up north where it was a bowls club, but they also had a pigeon racing club attached to it. Education and training, and then community loans. So organisations, again, that are embedded in doing really good work in their communities. And just while we're on this slide, we've made about 17 million of environmental loans. I'll come on and touch on that later about why that's so important to us. But that's one particular area where we're hoping to do more. So I've touched on why we exist. Charity Bank exists to deliver social impact. And one of the things we're very keen to understand from our borrowers is how our loans have helped them in terms of delivering more social impact. So this slide is a good illustration of how our funds have helped organisations grow and develop. So 50%, 57% of organisations we spoke to have said that the project would not have gone ahead without the loan. 72% said the loan led to growth in services offered, which is one of the fundamental reasons why we make our loans available. 96% said the loan positively supported their mission, so clearly we are doing something right. 78% said the loan improved the quality of their services and facilities, which again is something we're very keen to understand and see grow. 82% said it strengthened their organisation, increasing the likelihood for growth. I think sometimes at Charity Bank, when we're doing our due diligence, we do ask a lot of questions, but many of our borrowers say they feel it really helped and actually it's strengthened their organisations because it's made them think about the way they do things, it's helped them challenge themselves. 83% of organisations said that a loan has led to the growth in the assets of their facilities. Fundamentally, Charity Bank lends to provide assets. I'll come on and talk about some of the other facilities that we make, but we are predominantly a long-term lender and we lend for the acquisition or redevelopment of property. And again, very important to us because what we want to do through our lending is make organisations more sustainable. 66% of organisations said that by taking a loan, it made them more resilient during economic crisis, and we've seen several of those in recent years. So now I want to briefly introduce you to a couple of our borrowers that are actually going to show you and talk to you about how taking loan finance has helped them on their journey. So firstly, I'd like to hand over to Mandy Young from Adrenaline Alley. Over to you, Mandy. Thank you.
Oh, Mandy, sorry, I believe you're on mute.
You're on mute, Mandy.
Yeah, I just realised, sorry. Yeah, as the founder of the charity, getting a large loan to me was very daunting. But we'd got to the point in our history that the land that we were on was either going to be sold or we were going to have to pay long-term rent. So we obviously approached the charity bank, and through that process, we managed to purchase our asset, which was 6 acres of land and 3 buildings. And since then, we've just grown from strength to strength. It's just organically allowed us to build on the vision that we had at that time, but also obviously secure the asset, which has been incredible. But it was a very daunting thing for me as a founder in a charity to sort of think about borrowing that kind of money, but it was the best thing we ever did. It was amazing. Since then, we came through the pandemic, obviously very resilient. And again, since then, our vision has been able to come to fruition because now we're developing a hotel on site, as 72% of our participation comes from outside of Northamptonshire. So we wanted to create somewhere where we could offer them an overnight stay without having to worry about paying local hotel prices. and also be able to develop our marketing strategy, which has allowed us to offer packages such as, limited food, accommodation and a session, and be able to sort of reduce the costs of that as well by being able to target market those people who are coming from outside Northamptonshire and abroad. So it's been an incredible journey for us, of which we've now managed to secure all the money for the on-site hotel. So we're hoping to put the spade in the ground very soon, and be able to make that vision come to life. And yeah, just to offer our customers a much better experience, a first-class experience, but also, secure the future of the charity as well. So it's been an incredible journey for us.
Thank you, Mandy. And it's actually been a journey for Charity Bank as well, because obviously we made the original loan available to the organisation. We're now making a further loan available to help you build and deliver the hotel accommodation. And actually, on the back of making the first loan to Adrenaline Alley, I think we funded at least another one, if not another two skate parks. Not of the scale or quality of yours, but we did make loans available to a couple more skate parks. Now, I'm conscious you've got to leave fairly shortly, so I wonder, has anyone in the audience got any immediate questions they'd like to ask Mandy?
We've had one question come in still far from Andy, which is around, it sounds really ambitious what you're doing in terms of, first of all, even just creating a skate park, now going into the hotel. There must be a lot of planning. Can you talk to us more about kind of the planning and the vision that you have for Adrenaline Alley?
Yeah, I'm very lucky that I have kind of, in terms of the park itself, we have the designer and planner actually on site who I've worked with for 15 years. And we've been able to do some really good partnership work. And through that process, we've been able to think about, not just tomorrow or next year, but what does the next 6 years look like? What does the next 10 years look like? And what kind of budgets do we need? What's involved in the planning process of that, such as the hotel, for example, which was way out of my comfort zone. I do skate parks, I don't do construction. But again, it's just been a matter of getting the right people in place, project managing those processes to make sure that, one, I can learn from that, two, we can make it come to a reality in the right ways, and making sure that it's right for our customers. So making sure that, through the council, obviously the planning process was just getting through that initial planning permission, which went pretty smoothly, to be fair. I was quite surprised how well it went. But we obviously had a good team around us to make that happen. But yeah, it's just a matter of thinking about all those different elements that pull a project together, that allow us to make sure that the end user is getting the best possible experience they can. And yeah, that's the kind of journey we've been on through this. The hotel's been probably, well, it's been a vision of mine for 10, 15 years. It's been a reality project for probably a year and a half, 2 years. So we're now looking to put the spade in the ground, which, has been pretty quick, really. But Charity Bank has made that process so much easier for us to know that we could make it a reality.
Well, that's great to hear, Mandy. I've got a question, if I may. Sometimes I think trustees and directors can be quite nervous about borrowing. And this is going to be the second loan you've taken out, fairly significant loans.
Yeah.
How did you bring your trustees along with you?
I think it was after the first experience, to be honest. As I said, being the founder of the charity, and it's my son's legacy. So obviously I didn't want to do anything, like borrowing money, for example, that was going to put the charity in any jeopardy, or, we couldn't pay it in the future for whatever reason. So for me, it was a huge, huge risk. Although from a business perspective, I could understand that risk, and it was weighing up that risk with the trustees and the board members, who were probably more expert people in terms of business on that scale than I was. So it was about trusting them and believing in their decisions as much as, mine. And yeah, having done that, as I said, it was the best thing we ever did, was borrow that first pot of money, because it also gave me the confidence, and it gave me the belief that I could make things happen that I didn't think would happen initially. So yeah, we've grown as a result of that.
That's really positive to hear. And I always remember we funded a hydro scheme up in the northwest, and the community were quite nervous about borrowing money. But actually, once they'd got that hydro scheme up and running, that actually facilitated or created several more community enterprises opening in the same town. So often it is, isn't it? It's taking that first step, that brave step, and actually then it does act as a catalyst for other things to happen, as is the case for you.
No, absolutely. You know, it's again sort of going back to borrow probably, you know, nearly 3 times as much as we did the first time round. It was even more daunting, but I don't know, I didn't have the stress, I didn't have the worry that I had the first time, because I believed in the charity bank process. I do believe in the charity bank process. I know they've looked at everything, you know, 100%. They've given me the confidence to know the numbers are right.
Yeah.
You know, and that the project itself can generate the revenue to obviously help to pay back that loan. So yeah,
that's really good to hear. And it goes back, I think, to my earlier point about we do have a robust due diligence process, but rightly so. We don't want to get any organisation or encourage any organisation to take debt that they can't afford to repay. And actually, a lot of organisations take comfort from the process that we take them through. I think we've got another question for you.
Yeah, so one final question from the audience, Mandy. Given that most charities operate on very tight margins, how did you find that your cash flow was affected, and were the finance costs quite onerous?
Obviously, as the interest rates went up, yeah, there was a bit of an increase there. But to be honest, being able to develop the charity as a whole, since we had that first loan, has enabled us to make sure we've got the resources to make sure we pay that loan back every month. Our participation has increased year on year, to a point it's actually exceeding all our expectations every year. I think we're hitting about 108,000 this year, up to April, end of March next year. And knowing that the revenue that we can make from the hotel will again pay off the loan that we're borrowing for that, just gives us the opportunity to grow even more, to be honest.
Thank you, Mandy. That's fantastic. We'll let you go. I'm conscious that you've made a special effort to come in and be part of this webinar, so thank you very much indeed, and thank you from the audience. And we're now going to hand over to Sebastian Rocker from Micro Rainbow, who'll tell us all about their journey. Over to you, Sebastian.
Thank you, Caroline, and good to hear from you, Mandy, as well. Very inspirational. I'm Sebastian Rock. I'm the founder and CEO of Micro Rainbow. Micro Rainbow is the national social enterprise in the UK that supports LGBTQI people who flee persecution. There are about 60 plus countries in the world where being yourself is a crime, and the penalties go from the death penalty to torture to imprisonment. And those who are lucky enough that can escape those countries find safety in countries like the UK. There's about 1,000 people that come to the UK who seek safety every year because of their identity. And unfortunately, when they come to the UK, they're still not safe. Many of them face poverty, isolation, and homelessness and violence in home office housing, which is why Micro Rainbow decided to create the first ever housing scheme specific for LGBTQI people who flee persecution. What used to happen before Micro Rainbow opened its first safe house is that, let's say, a gay man from Nigeria will be housed by the Home Office with other people from the same country who held the same homophobic views of the people that he tried to leave behind. As a result, many people will be beaten up and even raped here in the UK. And that led to two things. One, to people becoming homeless because of the fear of the violence that they might face in housing, or they will because they knew about that, they will refuse the housing that they were given by the Home Office, and they will make themselves homeless. So there was a big issue of homelessness and violence amongst the LGBTQI community, migrant community in the UK. So in 2017, we decided to create our own safe housing scheme, and we piloted the work with a very small flat near London that had 2 single bedrooms. And what Charity Bank helped us to do with a loan of 1.5 million was to start what is now a scheme of 30 safe houses across the UK. We have not only replicated our model within London and across London, but also in Wales, in the West Midlands, and in the North. Yes, so our model is very simple. We buy properties that can be refurbished and used for people who flee persecution. And then we provide a number of services to the people that we house that go from employability support, English classes, but also pastoral care and one-to-one support, and a number of activities that help them build social safety nets in the UK. Every year now, we are able to support 1,000 people. We have a capacity of 120 beds at any given moment in time. And every year we house about 200 homeless LGBTQI people. Now, that the first loan from Charity Bank helped us also leverage additional 3.5 million from other social investors. And we believe that we are now at about 50%. We are meeting 50% of the demand for safe housing in the UK. So we set ourselves a new challenge, which is about eradicating homelessness of LGBTQI people in the UK. And we want to do that by 2030. So this pioneering work that we started in 2017 with Charity Bank is now translating into a second round of investment, which will hopefully help us acquire 30 more safe houses, double our capacity to 80,000 bed nights a year, and eradicate the issue of homelessness and violence of people who flee persecution because of their identity forever in the UK. I know we are limited with time, so I'm going to stop there because I can talk for a long time.
Thank you so much, Sebastian. I'm not going to ask any questions because I think we've got questions coming in from the audience. So I'll hand over to Joe, who will fire away the questions.
Yeah, so Sebastian, questions come in from someone where you've talked a lot about your growth over the past few years. How has Charity Bank supported you in that growth?
Yes, from the very beginning, as Mandy was saying, we got reassured by the fact that we had a sound business model that was not, we were not just the one ourselves saying that, but Charity Bank and our social lenders as well, proved really. Charity Bank has been a bank that I remember one of our first conversations, Caroline, and what stayed with me, it's something that is very unique, I think. It's we are here to make it work, not to destroy it. And yes, we might be tearing a few things apart too, but the purpose was to make the model stronger and to make sure that it worked. So Charity Bank is a very approachable bank, and we can actually speak with a human being when we need to have a conversation about things. And when we got our loan, it was just before COVID hit, so it was very important for us to keep communications channel open during a very difficult time, as we had no idea how things were going to go for our business model. So having that personal contact, the ability to reach out and ask for help. We didn't need actually to change the way our operating model was working and our agreement with Charity Bank, but the fact that we were able to have that conversation about what if this happens, how could we make sure that we can still weather the storm. That was really important and reassuring. The other thing that we never underestimate is the fact that we are keeping impact at the forefront of our conversations. Yes, there is a financial agreement. Yes, we pay our interests and all of that, but the fact that we are doing impactful work is always at the forefront. And in scaling, it was not just a matter of increasing our turnover or getting a healthier balance sheet. It was about what more impact are we going to achieve if we scale. So having those conversations and having that overview with the team at Charity Bank makes you feel that you're part of the same team and that you don't have to fight your own bank to get things done. So that has been very helpful as well. There are many other ways that Charity Bank has supported us by trying, for example, to make sure that our terms, were adapted according to the way that our model works. We have, I think in addition to Charity Bank, we have 6 other junior lenders. So another quality of Charity Bank is patience, because having 7 lenders, it's a lot of work and it's a lot of boards that need to approve things. So yes, there's more, but I will, Joe, give you a chance to ask more questions before we run out of time.
Thank you, Sebastian. I think it's really important you emphasize wanting to go on this impact growth journey, because that absolutely aligns with why Charity Bank is here and what we want to see. We want to support organisations who want to grow the impact that they're delivering. Have you got any more questions, Joe?
Yeah, so a question here about, are there any things, Sebastian, that you feel could have went better, that maybe didn't work so well in terms of the process?
There's always learning in any process. I think what I would have done differently probably is around planning. When you are a social entrepreneur, you want to get things done now or yesterday, and I think I personally underestimated the amount of time that is required to get a deal together. So yes, what I would do differently is planning for more time to get everybody around the table and to get the agreements in place. But that is time that is really needed. I think rushing, although it's in the social entrepreneur kind of DNA, it works against us. So taking really the time to check that everything was working on reflection was helpful. But had you asked me, I would have scaled the scheme within 6 months, when in reality needed it a bit longer.
Thank you. Any more questions, Joe? Sebastian, that's it. Thank you so much for your time and for sharing Micro Rainbow's journey with people on the webinar. Thank you very much indeed. And good luck with continued growth.
Thank you. Thank you for having me. Take care.
Thank you. Bye-bye.
Bye.
So now we're going to turn the rest of this session really into sort of practical issues, ways in which we hope we can help you and we can provide you with some information. So one of the things we wanted to cover was why use loan finance, because there are many reasons why organisations do take out loans. I've touched on earlier about how the vast majority of our loans are made for organisations that want to buy their own property. And this continues to be the case. Organisations may be in a rented building. There are periods in the market where actually it's cheaper to buy rather than to rent. They want certainty or security of their future by owning their own building, or maybe they just want to grow. I'm talking to an organisation at the moment which is doing amazing work, but they've actually identified the need for a safe house for women who are subject to domestic violence. And so we're at very early stage discussions with them. It may be that you want to refurbish an existing building that you have, that you may be able to get planning permission to extend. So for a vast variety of reasons, we lend against buildings. Quite frequently, we refinance other borrowing. Sometimes organisations find that their activities are being limited or curtailed by covenants in existing loan agreements, and so they decide that actually they need to refinance their loans. Or it may simply be because you can get cheaper money elsewhere. So that's another good reason. Sometimes it is just it's a short-term loan to bridge receipt of delayed funds, or it may be that you've decided that you need to sell a property and you're asking us to bridge receipt of the sale proceeds. So that's something that we do as well. It can be purely to support working capital or to invest in new activities and develop new income streams. I met with a fantastic organisation yesterday. They are a special needs school, and they've identified several opportunities for them. And in their case, it's a case of investing ahead of being able to generate additional income. Quite often the funds that we use form part of a match funding package. So you may have been very successful in securing grant monies, but quite a lot of grant funders will only lend up to say 50% of costs, and you've got to go and raise that other match funding, and loan finance can form part of that match mix. So similarly, it can also be to supplement grants and donations. What it cannot be, though, to do primarily is to replace existing grant income. Because it is a loan, it has to be repaid. Thanks, Joe. So in terms of what we look for, I've talked a bit, and Sebastian and Mandy have both touched on the due diligence process and how they got comfort out of our process and the questions that we were asking. So if you approach us looking for a loan, I just thought it'd be useful to run through the sorts of things that we are looking for. So first and foremost, we want to see evidence of demand for your services. There obviously has to be a need for what it is you want to do. It may be the growth of an existing service, in which case you can talk to us about waiting lists. Housing organisations, particularly smaller ones, can talk about how many people they have on their waiting list that want to move into accommodation. If it's a new service, we would have expected you to do an element of market testing. An organisation I was talking to recently, they've been in detailed discussions with their local authority as there is an identified need. So that's the sort of level of information we would expect. We would also wish to see well-developed plans. That being said, sometimes organisations do approach us at a pretty early stage. They may have an idea, they may want to make sure that actually their idea is fundable, but at some point through the process, we will need well-developed plans. This is fundamentally what it is you want to do, how you're going to do it, how you're going to pay for it, the costs in terms of setting up the project or buying the building, refurbishing the building, and then how you're going to generate the income to repay a loan. Sometimes we can help organisations, so we are what's known as an access point for the REACH Fund. The REACH Fund is a pot of money which helps organisations become investment ready. So you may have approached us and said, okay, we want to borrow money, this is what we want to do, and we will say, well, actually, we think your plans need to be a bit more developed, particularly around financial forecasting and projections. And on occasion, we can actually help you get a grant to help you pay someone to do that work for you, although you have to take ultimate ownership of any financial forecasts. We're also looking for timely and accurate filing of financial accounts. So we will search Companies House, we will search the Charity Commission website to make sure that you do file your accounts in a timely fashion. It isn't always the case, and COVID was a prime example of that, where most charities' accounts were filed late. But if there is a historic trend of late filing, we need to understand why. And then we want to see evidence of affordability. I've already touched on the fact that the last thing we want to do is get an organisation into debt where they just cannot afford the repayments. There's no guarantee about what may happen in the future. Things change, and Mandy touched on the fact that base rate increasing meant their loan repayments increased. But we want to see evidence of affordability now. We want to make sure there is enough leeway in your financial model that if things get tough, that you can actually afford to survive and to manage. So if you submit financial forecasts to us, we will stress test the model. So for example, Bank of England base rate is 4% at the moment. We might test it to see what happens if it goes to 5% or 6%, what this does for the cost of your organisation. If you're a housing organisation, we may take a look and say, well, okay, what happens if you have 5% voids for the year? You know, is your organisation still going to be sustainable? We're also looking for good governance. So we look at an organisation, we look at what an organisation does, and we're looking for a board of trustees or directors who have the right sorts of skills necessary to run that sort of organisation. And I think it's fair to say that, I mean, in a minimum, we would be looking for an organisation with a minimum of 3 trustees, or in most cases, directors, unless you are a for-profit organisation where sometimes there are less than 3 directors. But particularly as a charity, we would want to see at least 3, probably 4 or 5 trustees. And sometimes if we feel you haven't got enough trustees or they don't necessarily have the right skills, we might make a loan, we may approve a loan, make it available to you, but it would be conditional on you getting an extra trustee in place within an agreed period of time. We want to make sure that you have the right trustees. It isn't trustees for the sake of it, it's about the right skill set. We also look to see whether you can offer us security. This is always secondary source of repayment. It's if things go wrong. We are primarily looking at the income that you generate to repay our loan. As I said, as it says on the slide, the security is a second source of repayment. It's worth mentioning at this point that we do have a program. It's called our LEAP program, and it enables us to lend on slightly more risky propositions. And some of the lending we make through our LEAP program is unsecured. It's fair to say we don't do a lot of unsecured lending, but we have the ability to do some. It may be this is something we will be doing more of in the future. I think if you want an unsecured loan, it's worth having an initial conversation with us. But as I said earlier, primarily most of the lending we do is on a secured basis. We also look to see whether you have a risk register, whether it's something formal or informal, but we want to make sure that you as an organisation fully understand the risks that you're facing. This isn't just about the risks of a new project you may be wanting to undertake, it's risks for you as an organisation, and you know how you can mitigate or best mitigate those risks. And then, I mean, this probably should be top of the pile. We want to make sure that there is significant tangible social impact. And I've already talked about the fact that we are not so hung up on the legal entity that we lend to. We may be called charity bank, but you do not have to be a charity to borrow from us. We lend to something we internally called ILPOs, which are impact-led private organisations. So these can be for-profit organisations, but where the work they're doing has such significant impact that we want to support them. And a good example of that is we have an ILPO where they provide specialised schooling for children who would otherwise fall outside of mainstream schooling. And they make minimal profits out of this. I know a lot of organisations can make a lot of money, but they are doing it for the right reasons, but they happen to be a private limited company. Another client we have who is a private limited company, they are providing supported housing to those most in need, those who've come out of the prison service. So yeah, significant tangible social impact. Now, I thought it would be helpful if we summarise some of the questions that we think you should ask your lender. Your lender will ask you lots of questions, but these are some of the things I think that you should focus on. So first and foremost, interest rate. And this is the thing that we get asked first and foremost. What's the rate going to be? How much is it going to cost us? So you need to obviously understand what the rate is going to be and what type and term. How long is the loan going to be for? And is your lender quoting you a rate above Bank of England base rate, or is it above a rate called SONIA, which a lot of the mainstream banks operate, and they do differ. So you just need to be able to understand what the rate is that you're being quoted. And are there any fees? What other costs are going to be required to put your loan facility in place? So the odds are you will have to pay an arrangement fee. There could be something called a commitment fee or non-utilisation fee. This covers the period when a loan facility is made available to you and the point at which you draw down your loan. So you just need to be aware of what costs you have to factor in. Security, are you expected to provide a property or properties as security for your loan? So that's really important that you understand that at the outset and that you have a conversation with your lender as to what they will require. Commitment. When do you actually become obligated to the bank? Is it the point at which you sign your loan agreement? That is normally the case, but you just need to be aware of that. And also, most loan agreements will come with what's called conditions precedent. These are the conditions that you have to meet in order to be able to draw your loan money down. So you need to understand at the point at which you sign your loan agreement that you can actually meet those obligations. And if you don't think you can, then you need to discuss them with your lender. Lenders are human. Don't feel that you can't approach and have an open discussion. At the end of the day, we want to lend you money. We want to help you generate more social impact. We are there to work with you rather than being a blocker. Default's another thing that I think you need to be aware of. You need to understand from your loan agreement or ask your lender, what happens if things go wrong? What will your lender do? What are the triggers that can actually make them call an event of default? I mean, a really interesting example is what happened in COVID. So many of our borrowers, particularly our faith-based borrowers, saw their churches and their source of income shut overnight. And so we automatically gave all of our borrowers who asked a capital repayment holiday, and some of them needed an interest repayment holiday too. Things do go wrong, and we want to and need to work with you to try and get you over difficult hurdles. And loan agreements will also include covenants. These are not just financial covenants, they are information covenants as well. So you do need to understand what you are signing up to, what the tests are. You need to ensure that you think you can meet those financial covenants. We will have done our testing, but you need to be comfortable too. And you also need to be comfortable on information requirements. So all lenders will require you, for example, to produce your annual accounts, financial forecasts, in the main quarterly management accounts. If you don't produce them now, then you should be having a conversation with your lender. Don't just sign up and then assume you'll discuss them later. Have that conversation at the outset. So what else should you look for from your lender? Well, ideally a fast and efficient process. You've got an idea, you want to buy a building, you need the money as soon as possible. So keep in regular touch. You need to understand process and costs at the outset. Ask, don't just assume. You will be required to meet a lender's legal costs and also valuation costs, and they can give you an idea as to what they will be. And you're obviously going to need to then include that in your budgeting. Look for social sector expertise. Charity Bank exists only to support the social sector. There are other social banks out there like Charity Bank. I think you are better borrowing from a social sector bank if you can, because when things go wrong or you face challenges, a social sector bank is more likely to support you. And also they can introduce you to other people as well. We quite frequently put borrowers together. They may be facing a similar problem, and so I will connect one borrower to another, and then you can share solutions that you're looking for when you've got a common problem. You want a supportive approach, a funder that's working alongside you. You don't want to feel like it's a battle. You want to feel like it's a partnership. And more than money, I think you need to look for a lender that has good ethics, values, and the right ethos that matches your own ethics, values, and ethos. So what makes Charity Bank different? Well, we've had over 20 years experience of working in the sector. It's all we do. We take deposits in and we lend the money out. We don't do day-to-day banking. We are here to support the growth of social impact. So we are a committed partner. It is all we do. We're a social sector specialist. Many of the team actually sit on the boards of charities. I have a wide charity trustee portfolio. We are patient and supportive. We work with organisations. And I think just to put it into context, in all of the bank's time of being, we've only ever had to call in a loan once. And that's because the trustees walked away and they wouldn't connect with the bank. So we work with you. Yes, things do go wrong and organisations do have to sometimes decide to sell properties, etc. But we work with you. And our loans are tailored to what you need. We want to hear what it is you want to do, and we try and tailor it to meet your needs. We have a team of regional managers who are located across the UK. They are more sector specialists now rather than regionally focused. But not surprising, you can see from this that the largest amount of our lending is in London and the South East, primarily because that's where asset values are higher. But we are spread across the UK, and we're keen to do more in any area in the UK. So our loan terms from 150,000 up to 10 million. If you're talking about 10 million, these are the larger loans that we deliver in partnership. I talked about that earlier. Primarily, we lend alongside Better Society Capital, but we do work in partnership with other social banks as well. We provide bespoke debt structures. We don't have a set product that you've got to fit within. As I said earlier, we listen to what it is you want to do, and then we will tailor something to meet your needs. Our loan terms are up to 25 years. Occasionally for residential housing, we will go up to 30 years. There will be a break clause at year 10, but the actual repayment is scheduled over 25 years. And at year 10, we then sit down and have a discussion about what next. Do you continue borrowing from Charity Bank? We also provide development finance. So a lot of you want to build new properties or extend existing buildings. So we can help you with development finance. And what we tend to do there, we make it very easy for you. You would take the development finance on an interest-only basis, and then on completion of the development, and once additional income is going to flow from the buildings that you've built, you would then slip straight into a long-term repayment loan. And the other thing here, it's important to note, there's no early repayment penalty on variable rate loans unless you decide to refinance us with another lender in the first 5 years. If it's because you've had a good trading year and you want to pay off a little bit of your loan, or someone's left you a legacy, then that is your good fortune and our misfortune. And then the other thing I just wanted to touch on, there are two sides of our story. So I've talked in detail about the loans that we make, but we can only make those loans if people save with us. So we're actively looking for deposits as well. You know that if you put your money into a savings account with Charity Bank, it will be put to good use. We are very clear about the types of organisations that we lend to. We are also a member of the Financial Services Compensation Scheme. I think that limit is set at 85,000 at the moment. So effectively, it means that if you invest up to 85,000, if the bank were to go bust, you would be protected by the Depositor Protection Guarantee Scheme. But we have details of all of our savings accounts on our website for charities, not-for-profits, SMEs, individuals. So please do take a look. So that's it for me. I just wanted to touch very briefly on areas of particular interest in case you work in these fields. We are very keen to support organisations on their journeys to making their properties more energy efficient. We ran a small energy efficiency grant loan scheme earlier this year, which was very successful. And we're looking at other ways in which we can support you. We have a tool on our website from the Energy Savings Trust that may be of use to you. If you are thinking about doing some work on your buildings, then please do get in touch and we can talk to you about how we may be able to help. The other couple of areas we're particularly keen to work with is supporting for-profit organisations who are supporting the social sector. So if you are talking to a possible landlord who might be going to lease a building to you, we would be interested in talking to that landlord to see whether they need help in terms of loan finance. And then the other area, which is of particular interest to us, is in the children's care space, and particularly children's homes. We're looking as to how we can help organisations, social sector organisations, that are proving there are better ways to provide housing and home for children. It's very well publicised that children who come through children's homes don't have such good experience in life. The outcomes of their lives are often much less than children who've remained within families. And we want to support those organisations that are trying to disrupt the way that some children's care provisions are provided at the moment, to try and ensure that the children get better life outcomes. So thank you, and I'll hand over to Joe now for questions and answers.
Yeah, fantastic. So we've got a few questions that have come in. If you can please use the Q&A function at the bottom of the screen to ask your questions, that would be great. Nathan, this question I think would be best for you. So this is someone who said, how can a charity or social enterprise determine if loan finance is the right option for them? It might be good just to kind of talk about kind of our eligibility form, and also kind of the process of kind of how we chat through with a charity in those initial stages.
Yeah, thanks, Joe. And yeah, thanks for everybody for the question. So it's a really important issue. You know, we're absolutely aligned around your need to fully understand the features, risks of any loan finance before you or your board take this step forward, particularly where it's the first time an organisation has borrowed money. So we particularly would be looking to ask a set of questions that would help us really understand the board's strategic thought process, so that we can understand both is this CapEx, is this investment that you're making in line with your objects? Is it in line with your purpose? And where does it fit into your strategic planning and your life cycle? Because obviously some investments that organizations in the social sector make are in line with their growth aspirations and very much in line with their strategy, and that makes it easier for us then to get behind, because we can see it's a repetition of an extension of housing maybe for vulnerable individuals, and we can see how this supports impact, but we can also see how it extends the balance sheet and the financial sustainability of the organization. So there's basically a set of questions that we'll be asking, but you can also self-assess some of this yourself. So on our website, if you navigate through our website and go to our loans page, one of the things I love about our website is that we're really transparent. There's lots of information on there that you wouldn't find on another bank's website that helps you both understand what is it you're looking to do. So on that website, we've got a different journey for you depending on whether you're looking to borrow up to $500,000 or if you're looking to borrow over $500,000. For organizations that are looking to borrow less than $500,000, there's some very simple self-eligibility questions that will help you determine whether or not you're eligible for loan finance. And for organizations that are looking to borrow over $500,000, we would actually prefer to have a conversation with you straight away within hours of you making an inquiry on our website. A member of the team will get in touch. As Carolyn's mentioned, we would look to put somebody in touch with you who is focused on your sector, who understands the funding models available within your sector. Because of our collective understanding across the charity and social impact space, we understand all the different kind of funding models that exist. Another thing we have on our website that might be of use to you is our development lending guide. So for organizations that might be looking to develop, so Mandy earlier on in the call touched on construction finance, and for as a founder, not having the expertise necessarily to develop property and to take on that construction approach, whereas we have that internal expertise, and we'll work with you in conjunction with your professionals, your planners, your quantity surveyors, who will help quantify the development, and then they'll provide cash flows to us that we can use to fund against. So effectively, we'll ask a set of questions that will support you on that journey. And some of the borrowers that we're drawing down loans to today, we've been in having that dialogue over the past couple of years and supporting on that planning process strategically. Some borrowers come to us and we can work much quicker because they're much further forward in their strategy, and maybe they're just acquiring another asset that's in line with their current planning, and we're able to very quickly complete our due diligence, and we can get loans drawn very quickly in those situations as well. It really depends on the situation. So the funding model of the organisation has, and then the security or the property that's involved in the transaction. It's really important that we understand what it is that we're taking a charge over. So as a responsible lender, we will work through the nature of that, looking forensically at the security, making sure that you've got clean title as you go into that process as well, and supporting you. Because some of the assets that are held in the charity sector may have been previous local authority assets, and there might be some work that we need to do as we enter into that. So hopefully that's helpful.
Yeah, thank you, Nathan. So that's great, thank you. The next question, maybe you can help answer this one as well, was there's been a lot of talk around social impact and the need for impact. How do you assess social impact of organisations when approving loans?
Yeah, that's a really good question. There's very few banks actually that will ask you questions about your impact, and that's because we place as much emphasis on your mission and your impact as we do on the financials of the organisation and your strategy. So your social impact is very relevant to us, and we will actually send you a questionnaire, a social impact questionnaire, and that questionnaire helps us to quantify your impact. So you don't need to necessarily have a written social impact report. If you do, that's great, and we'd love to see it, and we'd talk about it and ask you some questions. But clearly, some of the things that we look for are where you're based and how that impacts. We want to get our finance into areas of the country that other banks might be struggling to do that. So we'll be looking at who benefits from your services, where are they based, and what community are they represented in. So that could be social economics. We look at the IMDs, for example, and understand that. We'll look at the number of beneficiaries. We'll look at the founders of the organization and the directors of the organization as well. So we'll do due diligence really around understanding your organization, how it represents its community, and then we'll ask a set of questions about your social impact, your environmental impact, the number of beneficiaries reached. And actually what I would say is that no two are the same. It doesn't matter. We're not looking for a specific bar in terms of your impact. What we're actually looking to do is understand the extent to which our funding supports your mission. And that's our mission. That's where we achieve our objects, and our mission is by unlocking more impact in your organization. And if we can try and quantify that, then that's great. But we also, we're looking very much at this process at the moment and looking at how do we streamline that a little bit more and reduce the number of questions whilst gleaning the same level of information. So we're very focused on that whole area of impact assessment to support you. Yeah.
That's great. We're just on our final few questions now. So if anyone does have any final questions they want to put into the Q&A function, if we don't get a chance to get to it, we will respond to you directly. Well, maybe for you, Carolyn, there's a question here about, it's great hearing about some of the positive examples, but potentially some anonymous examples of what hasn't worked so well and the consequences, looking at it both ways.
Yeah, okay. So I can think of a couple of examples. We had a small housing organisation that, for all the right reasons, decided that they wanted to provide more affordable housing. And they had a piece of land they decided they wanted to develop. This was back in the late, I think it's sort of 2007, 2008, just before the recession hit. So anyway, they did all the surveys, they decided to do the development. They started, what they weren't aware of was that there was a pipe running under the site that wasn't on anyone's maps. That had to be rerouted. They've then found significant levels of asbestos that had been buried on the land, which caused increased costs as well. And then they were effectively doing an enabling development. They were building a few properties for outright sale that were going to cross-subsidise the building of the affordable homes, and the market fell away. And so they were faced with a terrible dilemma. They were an unincorporated organisation, which, for those of you that aren't aware, means that the trustees have personal liability. It's their names and addresses that are on the loan agreement. And I won't name which one, but one of the high street banks came down very tough on them. And so we stepped in and we refinanced it and gave them some breathing space. And they are happily operating to this day. They did eventually manage to sell the properties, and they built 12, I can't remember, it's 12 or 15 new affordable homes that to this day remain fully occupied. So that was a success story. Another one more recently was an organisation in the leisure field. Sadly, when COVID hit, it was a leisure facility, it shut. They got a lot of furlough money because they had to furlough a lot of staff, and it sort of saw them through the COVID period. But a lot of the attendees at the leisure centre were vulnerable people. They did a lot of work with vulnerable people who perhaps had a stroke or a heart attack, etc. And the numbers just didn't come back. So sadly, that has been sold. Fortunately, it's been sold to another social sector operator, and we're hopeful that it's going to be reopened in the not too distant future. So yeah, there are positive outcomes. Even when things go wrong and assets have to be sold, sometimes, there is still a positive outcome.
Great, thank you, Carolyn. And just last two questions now. A question around your comment, Carolyn, on talking to landlords if a charity is thinking of moving. Can you expand on that?
In terms of speaking to landlords, is this more about buying your asset? If it is about purchasing the asset, then it's worth having a conversation with your landlord, because often rent is higher than mortgage payments, depending on the cost of borrowing.
And
So
they want to do digitalisation at the same time.
So certainly worth having a conversation there. And sometimes organisations just simply have to move because the building is no longer fit for purpose, or as is the case now, so many workers work from home and it's just too much space.
think just to also add to that, I think the comment was made under your conversation around ILPOs, Carolyn. So I think
Oh, yes, sorry. Okay, yeah. So we're beginning to fund a lot of organisations or limited companies that are buying properties and then they are letting them to social sector operators. So it may be care providers, supported housing providers. If you are in that position and you are looking to rent or lease a property from a landlord, it may be worth you mentioning the existence of Charity Bank, because a lot of these operators need to raise finance to purchase those properties, and we would be very happy to talk to them. I'm in one such situation at the moment where I'm talking to a large charity, but they have a number of landlords who buy properties and lease them to them, and we're seeing whether we can actually support the landlords as well, because ultimately there is social impact there. They are purchasing a property that a social sector organisation is then going to operate and generate social impact from.
Great, thank you. Sorry, we are overrunning slightly, but if you have got a question, we will answer it. You did mention you might support capital, working capital loans.
Yeah.
Can you expand on that?
So it depends on what you need the money for. Sometimes organisations want to grow. There may be they may know there's some funding coming through in the future, or they may be delivering a new service and there may be a period of time where they need funding. They need to, for example, take on staff, they need to do marketing before income is generated, and then we can bridge that period. We can provide a relatively short-term loan to get you to the point where actually the income's being generated. Interest would have to be covered, and in some cases we would need to see capital repayments as well, but we would look and delve very closely at your cash flow forecast and the assumptions that you've made that you're going to generate sufficient income to repay the loan. And it would make things very much more simple if you had a property asset that you could offer as security during that period.
Fantastic, thank you, Carolyn. And Nathan, final question is, how do you actually see the role of loan finance evolving for charities in the next kind of 3 to 5 years?
Yeah, that's a really interesting question. I suppose we are working, as Carolyn said, more across the supply chain. So we're very focused, because we're an impact focused lender, we're very focused on working with providing our funding, getting our funding into anywhere where we can see impact. And so I think one thing that we're seeing is what I also call joint venture funding. And this is what Carolyn's been talking about there, where actually we look at the ecosystem of the organisation. So for example, if we look at children's care, we want to support more children's care providers because we know it's strengthening outcomes for beneficiaries, for children in the UK who are sometimes being accommodated. We want to strengthen the social sector organisations that particularly are providing housing and support to those individuals and those beneficiaries. And so when we engage with this sector and when we engage with organisations that work in this sector, we can see that sometimes they might choose to lease some of their property and they might choose to own some of their property. And actually that mix of lease versus ownership is really important, because it wouldn't be appropriate for them to own all of the assets if they're maybe providing temporary housing short term. And so they need to have the right mix of assets and capital and therefore lending in order to make the organisation and the model work. So I think what, in a roundabout way, I'm sort of saying is we want to just engage with organisations that are providing services to individuals, that are providing impact, and we will work with you to help you identify if there's an opportunity for you to work with a private provider or private landlord to develop an asset that is actually purpose built for you and that you're going to lease it for 5 years, 7 years, 10 years, then we can actually provide funding against that structure as well. So it's making sure that we're talking to you about your strategy, your long-term, gain a long-term understanding, because there's lots of different models of funding we can provide. So we like blended finance that really supports organisations that are smaller, and when we have the opportunity to provide blended finance in conjunction with one of our shareholders or other grant making foundations and trusts, then we'll look to do that, because we know that helps support smaller organisations who may be accessing assets for the first time. They might be buying assets on their balance sheet for the first time. And when we look at our impact as a bank, the most important thing we can do is help organisations acquire assets, because that secures their future, it secures their mission, often for the long term. So however we help organisations on that journey is why we're keen to just engage with you about your model and understand your strategy, and then we'll work with you over the long term to support you in that, potentially working directly with you, but also organisations that you work with as well, to provide funding that way.
What I would just add to that is, if you've got an idea or you just want to chat something through, the team's numbers are all on our website. Please do pick up the phone to any one of us. We're very happy to have that conversation. There's no such thing as a wasted conversation.
Great, fantastic. Thank you, Nathan. Thank you, Carolyn. Thank you to our guest speakers, Sebastian and Mandy, as well. So that concludes this webinar. Thank you very much for coming along today. We have mentioned quite a few resources during the webinar. So we've got an energy savings tool, the development lending guide. There's a couple other resources that were mentioned throughout. We will be sending you an email after this webinar that will direct you to those different tools. So you don't worry about having to try and find it on Google or whichever. You will get an email from us. And as Nathan mentioned, our website is well equipped in terms of being able to give you information about, be it green loans, development finance, or even just loans in general. Our next webinar is going to be on the 10th of December, and this is going to be focused very much around how loan finance can support energy efficiency projects. So if you or somebody you know who is looking for kind of an energy efficiency project for their charity, social enterprise, or social purpose organisation, please do kind of sign up to it. We'll send you information on this as well via email. You'll learn about our energy savings tool, real world examples of how we've helped with energy efficient upgrades, and also tips for actually navigating a green energy efficient project. And there'll be a live Q&A as well with Nathan and Carolyn, as well as some of our borrowers who have actually gone through this. So thank you very much for your time today, and have a great rest of the week.